Hey everyone, what is up? I am Charlie Shrem. You are listening and watching Untold Stories, where twice a week we get to dive deep with some of crypto's most influential leaders to really understand how this movement came to be. Our industry seems like it's getting a lot more complicated, and I'm going to introduce my guest Annabelle Huang here in a second. Annabelle, thank you so much for coming on the show. Before I introduce you,
Thank you so much for having me.
the world is very rapidly changing. Growth is happening very fast. We're seeing a lot of craziness. Just the other day, my mother-in-law, like, she lives on one block that has 6 houses, and within 1 week, 4 of the houses were knocked down to build new houses. Change happens fast. It doesn't happen slowly. It moves quick. These years that we're going through now definitely accelerated by coronavirus, but all the seedlings were already there. We're going through like some rapid epic change. And on top of that, it seems very complicated. Crypto is complicated. A lot of people are trying to make money in it. They're trying to understand that as the world goes towards a inflationary type of economy where we're constantly having to chase the yield or protect our assets. How can we do that with crypto? So here on Untold Stories, I guess we try to unpack it and take some of these uncomplicated topics and make these complicated topics uncomplicated. And it's really exciting. I was just actually talking this morning to a friend of mine, Thomas, who's in Austria, and he was traveling around the world. He was very fortunate that he was able to travel around the world during the coronavirus whole pandemic. And I haven't left Florida during it, so I kind of haven't seen what's been going on outside of Florida. And was its own thing during. But he was telling me, he said he just got back to Europe, and he said in Austria everyone is angry, they're mean, there's hostility from all walks of life. There's no trust in the government anymore. There's resentment. There's basically civil, if they didn't think that coronavirus was going to kill them, they'd be out on the streets protesting because there's unrest. And a lot of the questions come back to like centralization versus decentralization in government. And Annabelle, you're born and raised in China, close to Hong Kong. You're living in Hong Kong. Hong Kong has been close to your heart, it seems like your whole life. And I'm in the US, and I was just talking to my friend Tom in Europe, in Austria. And these bring these are staggering different places right now, what's going on. How are things in Hong Kong? Right before coronavirus, there was huge like democracy protests. A lot of people were moving towards their smartphone life. And a lot of people, and I want to really ask this question, a lot of people were saying, why do I need to be a citizen of this one place? Why can't I just be a citizen of the smartphone? Has that continued?
Yeah, for sure. I think coronavirus, if anything, kind of accelerated of our lifestyle in the virtual world, right? And people didn't need to physically be in one place. Like so many of my friends who used to live in New York or San Francisco left because they didn't need to go to the office anymore. Um, and what's happening in Hong Kong, I guess, the rest of the world is also the same. And I mean, the economy in Hong Kong has been impacted pre-COVID, just given a lot of the political unrest, and that has definitely continued into the last past 2 years. Um, and then you look at what's going on in China, where that's arguably where it all started, but with the really tight government control and um, I guess the power of centralization, then everything got under control really fast. People were able to start travel and live normally compared to the rest of the world, pretty much like since May last year, versus I guess what we're seeing in Europe, like you mentioned, or even in the U.S., where I think there's
Yeah, a lot
still
of
a lot of
places still, yeah.
lockdowns. Yeah, yeah, and then even in Hong Kong, where there were some cases the past week, and things are getting a little bit out of hand. So the curfews and everything are back in place.
So it seemed to me like if you look back at the last year, and I don't want to spend too much time on this, I wanted to just kind of use it as a segue. But if you look at over the past years, a lot of people are going to look at what the best style of government is to deal with not just the economy and the people during normal times, but how do you deal with things when there are emergency situations or pandemic times. And I guess I'm leading into a conversation that before crypto, governments have always had the tool of monetary policy to use as a lever system. In good times, save, and bad times, spend. It's just like we have on our own household budgets. We do the same thing. One of the biggest fears is that governments will lose that monetary policy ability as Bitcoin and larger crypto becomes this huge global financial ecosystem. And a lot of people said, well, that's what we got into this in the first place. It's probably why most people got into this because they want to see that maybe governments don't do as good as a job in that monetary policy. But you have a place like China that's always been on the forefront of how do you say wanting to understand, have all the data, have all the research, and make largely centralized decisions. But at the same time, China has been one of the biggest advocates, proponents of crypto as a whole, pushing it forward. I never really understood that. I never understood like what's going on.
Well, I wouldn't say they're a big proponent of crypto per se. I think digital assets for sure. Just you look at
Ah,
the
there's a
past
difference
decade,
now.
right? We can get into that. I mean, the last decade we've seen just incredible growth in terms of smartphone coverage and mobile, like people living on mobile in China. Everything, all the payments are done digitally through Alipay or WeChat Pay, and people are already very used to digital payments. And then now China is putting a lot of effort into pushing out its own central bank digital currency, or DCAP, as they call it. And they've already rolled out in a few cities as trials, and people are trying to get, understanding what blockchain is, because that's what this DCAP lives on, and understand what digital wallet all means. So I think it is quite interesting that way. But I think in terms of crypto assets, right, like the Bitcoin and Ethereum's of the world, they have effectively banned trading on those versus the fiat onshore. So
How do you do that?
I think, yeah, they just, they wouldn't, they, there were regulations that were put in place in 2017, and a lot of the on-ramp exchanges were shut down. So now people have to, the different ways to on-ramp has been quite unstable and not as secure. But that's just the way it is in China.
Hey, so I used to like ask questions. So you got your I forgot to like read the introduction of you and everyone's like, "Who am I listening to?" But I'll
Right.
it doesn't matter if you don't want to listen to my guests and if you don't think there's someone worth listening to, then leave. I don't want to always have guests that have big followings and you want to have really just brilliant brilliant people. But you started your career on the trading floor. You were working as an FX structure and risk management at Deutsche Bank, and you worked in banking. And then I would like ask my next question would be, well, tell me what it's like transferring into crypto world. What are you doing now as you used to do? But really,
Sure.
you're
Yeah.
kind of, but I'm not going to ask that question now because you started the Amber group and you have the Amber app for retail customers. And I think now my data is showing that you're managing over $200 million in assets, crazy growth in like 4 months, 40,000 registered users. And you're essentially doing what a lot of these other companies done is stripping out all the middlemen of being able to collateralize assets and then give people interest on that because you can then go ahead and re-lend it out. But I'm going to tell you right now, Annabelle, I don't know how it is in Hong Kong, but here, if I go to my friend right now and I say, I have the lowest risk opportunity possible that you can earn 5% a year, they're going to think it's a scam because banks traditionally have always taught us, and I didn't know this until like a few weeks ago or a few months ago, that interest rates are tied to the government. So the government sets these interest rates that they get us in our banking and our bank accounts. But
Yeah.
really, banks are for-profit companies. So what's really going on there? How much money are banks making off of every dollar that sits in my account every year?
Well, I think it's just still two very different markets, right? The traditional financial markets and the crypto market. And that's why you're able to get a structural yield pickup in the crypto markets at this point, just because, I think in traditional markets, sure, I think the banks are taking a lot on the interest rates, but I think just because the market is very mature, there are a lot of cheap dollar funding sources. And the Fed fund rates are low. We're living in a zero to low rate environment. So actually, banks are having a hard time too because it's hard for them to generate interest, especially on a far end where
The
how
chase of the
for a
yield,
lot of the
right?
pension funds, yeah, like for pension funds, where you're looking at 30 years, but you're really looking at 2%, and that's not really enough for a lot of the institutions. So banks are struggling too, and um, in the crypto world, just because, right, people, um, the the linkage between crypto and traditional markets are not that solid yet, and people are it's very hard for people to find cheap dollar sources in the crypto markets, and that's why for
Oh,
people who can lend out, right, dollar assets, then they get a much higher yield on the back of it, and we're still benefiting for that. So that's why you can earn up to 11% per annum on Amber app with, dollar stablecoin deposits versus probably 0% in your bank account. Um, but that's, still inherently, I guess, two different markets. One is fiat and one is when you put a digital wrapper around it and bring it into the crypto world.
what are some of the type of things that you and some of your competitors can do with that money? Most people don't understand that there are structured products out there right now that you can go out and get an immediate return. Like, for example, if you own shares of a company, I didn't know this too, but I can go out right now, and if a stock has done an average of a certain percentage year over year over year, you can get like half that return in advance by all these crazy products I'm learning that existed I didn't even know. And really, like 10 years ago when I met someone in Bitcoin, I got all these advice 10 years ago when I got into Bitcoin that I should have done. And someone told me 10 years ago and said, when they have structured products, when you give Wall Street products that are crypto, then it'll be amazing. And it took 10 years to do it. No one realized that. What does that even mean?
I mean, the derivatives market in crypto is still so new, right? Compared to what I used to do. The FX derivatives market is huge, like multiple times of the spot market volumes versus here in crypto. I think it wasn't really until maybe what happened in March last year then people started to realize, oh, maybe going crazy levered on futures or perpetual swaps wasn't the best way to trade a market. And they start looking into different tools and options market, et cetera. And then that got people looking into the structured products. And it is quite interesting because I think it is um, a tool for to either hedge your risks as a risk management or as a way to enhance your yield. And it's quite simple actually. Higher return always means higher risk. So for people who don't mind taking on a little bit more risk, they can monetize it through structured products and earn an outsized return. For people who are looking for perhaps more conservative products, and they earn probably just the kind of the fixed income products we've seen in the market. And you also ask like how do we generate these yields through our products. I think a lot of people in the industry they would do borrow lending against each other, either through retail customers or in between institutions, and that's something that we also do. In addition to that, Amber Group really we started more as a quant prop shop
Oh,
in
cool.
2017. Yeah, so we really the bread and butter of our business is generating yield through our market neutral arbitrage quant strategies. And that because we're market neutral, we're basically long volatility in a sense where if the market is more volatile, then there are more price inconsistencies or more room for arbitrage, and we make return that way. So it's not like maybe some of the other funds are discretionally long and they might suffer in a bear market. But now I guess in the bull market, everyone is pretty happy.
DeFi, DeFi, DeFi. You keep hearing me talk about it, and we know at the same time that the stock market is at record highs, but the economy is broken in recession. Government debt is off the charts. They're printing trillions of dollars. We need a new financial system, and I've been talking about it. We've all been talking about it. Decentralized finance. We know that too. We know that there's like $40 billion in value sitting in all these DeFi protocols, and it's barely a year old. It's new decentralized finance, and it's brilliant, and it works. And there's a lot of money to be made in things like yield farming, being able to provide liquidity, but a lot of them are high risk. There's scams and rug pulls that are so common to investors. We don't want to repeat what happened a few years ago in the crypto space. But what if there was a way to access those DeFi yields in a safe and transparent way? Well, I have the CEO, Tim Frost of Yield.app, my newest sponsor on the show. Listen to that show and check out Yield.app, because here you have this team that is constantly filtering through all these DeFi investments. They're consolidating your gas fees, and they're only investing in a select few that generate more than 20%. But their risk is they're not just investing in these tokens and waiting for them to do well. They're also providing liquidity. They're doing yield farming, all these low risk, high investment to make the infrastructure more efficient and better. So not only you're investing and making money, but you're also helping to grow this ecosystem. Make sure you check them out at yield.app. That's yield.app. And listen to the Untold Stories with Tim Frost, the CEO. We have all these coins and tokens, and they sit on all these different blockchains, and we have to keep multiple wallets and different addresses and everything. And the only way to do it without having to do that is trust a centralized place like an exchange or a broker or an app that you use. Well, what if there was a way to do it without having to trust one different place in the ethos of crypto? Cosmos, my sponsor Cosmos, that has been around for so long, they're actually following their original roadmap and being able to offer universal wallet, high node synchronization, inter-blockchain communication, bridging Bitcoin and Ethereum together and keeping it all on one wallet, being able to build on top of it and do the coolest things possible. Make sure you check them out at stargate.cosmos.network. You can play with all these different features. It's so cool, and it's really bringing the next wave of crypto and adoption. If you really want to be ahead of everyone else and all your friends, make sure you understand the new technology that's coming out. Stargate.cosmos.network. You're going to love it. The biggest problem with DeFi today as we know it is there are simply no aggregators or way to bring all of this information and data together so we can trade off of it. We're going to Uniswap and we're clicking sell, 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 or buy, buy, buy. I mean, imagine staying up till 2 o'clock in the morning just so you can make a trade. The folks at AirSwap, my newest sponsor, are doing exactly that. They are the fastest and most liquid aggregator on the Ethereum blockchain. They've built a state-of-the-art algorithm that aggregates all the major decentralized exchanges in order to beat the market price. They are willing to offer you on your first swap a 50% gas refund. Check it out in the show notes. I mean, there's no reason not to use PowerSwap. It's the same thing as using any of these other sites, but you're getting a better price, zero slippage, better swap, safer, faster, more secure. What's the downside? There is none that I could think of. And you're getting your first swap 50% gas fees paid for. It solves every problem that I could think of. Make sure you check them out. They're my sponsors. I love them. And I love them even more that they're pushing crypto forward. So are you telling me that the folks who are pushing the buttons, who are buying the millions and tens and hundreds of millions of dollars worth of Bitcoin and other crypto, so these folks are not looking at it from like the price is going up perspective. They're looking at it from like this is a very new, inefficient, volatile market. So we're going to make money when the price is going up or the price is going down. Money will just
Yeah.
continue to pile into it as long as there's volatility, and there's volatility as long as more money piles into it. I mean, until our industry gets a lot more mature and a lot more valuable because the more money that's into it, the less market moves you can do because the structured projects products create hedges against each other and the markets don't move as much. How long do you think
Yeah,
that'll take?
exactly. That's what we're seeing in traditional equities or FX market, where prices are, this price discovery is really mature and
Yeah.
standard, and the room for arbitrage is so much less than what we're seeing in crypto. And to your point, right, as more of these sophisticated traders and market participants and smart money started piling into the crypto market, then we're seeing the room for arbitrage is also becoming less and less, and people are finding different ways to chase yields. But it is still great for the industry because, right, that the pie gets bigger, and there's the market cap gets bigger, and then there's more liquidity. There are more people
Yes.
getting involved. Yes, it's definitely better for the long run. And by this rate, right, I wouldn't be surprised if we really see, I think even just where we were last year, right, March last year, compared to where we are today. That's also something just so incredible. I would have never imagined. So I wouldn't be surprised if we see a very mature crypto markets much sooner than some people might expect.
But it's not just gonna be, one country based and or continent based, and I don't even like to say the word like so, like, for like, I don't like to say that something started in Asia, for example, because I think that term has become like a very like an easy way for us to say like Asian instead of giving people like specific like where they're from or whatever. So to rephrase the question, you look at something like DeFi that has really was pushed by like negative interest rates in places like Korea and Japan. But from like a whole global perspective, how has really in like negative interest rates pushed that forward? Because DeFi has started really in China, in Korea, and Japan. Some of the first projects and companies that came out of the space, even some of the earliest smart contracts were were based on Ethereum coming out of China back in 2017 and 2018. You think that was a result of the fact that you couldn't make money in other places and even keeping your money in a bank was negative?
Um, I would say that I think, again, not trying to mention Asia versus the rest of the world, but I think traditionally, like you said, right, it is pretty hard um,
To make yield.
to make money essentially in a lot of these places where, like in Korea and Japan, where interest rates are very low, and I think younger a lot of people in the younger generation are just looking for leverage and for yields, and really being able to make it. And I think they all found crypto just because of the volatility and potential for growth. And obviously, China is part of this market too, and that's why we see really a boom in the participants in Asia, right, and in the 2017 boom. But I do think a lot of the innovation on the tech side, on product side, is still coming from the US. But although I might be biased because I first got involved
Oh,
in
India.
DeFi in New York.
I'm I'm telling you,
So,
India, it's got the best
and
projects right now. I'm like
that's
investing in like
true.
3 different projects coming out of India and Pakistan right now. It's insane. I think they're the next South Africa, India, Brazil, um, Argentina, Mexico is big, right? Huge right now. Mexico's huge. Even Canada, a lot of countries in Africa. I'm seeing a lot of projects, even out of Egypt, Botswana. I'm seeing projects out of. I wish I saw more out of Morocco, but really, India's getting really big right now. That's where you're seeing a lot of the FUD right now too. It's like, oh, India's banning Bitcoin, but they're not. But that's where you see a lot of the FUD.
Yeah, and I think it's interesting you mentioned all of these maybe Latin American or African countries, or where I think crypto for them or DeFi for them is
Survival.
just exactly, that's what they need. It's not something that you punt around and kind of like a speculative asset. There is real demand. They needed to replace the banking system, and that's incredible because that's, I guess, where Bitcoin or the whole open and DeFi system is built upon, right? It is the bank, the unbanked, and all that, and we're seeing that really happening. But I guess for the rest of the more developed world, then it is still kind of an asset for alternative
Sure.
investment or even as speculation.
When Tether first launched back, oh, so long ago, like an Omni, it was really an experiment, like Mastercoin Omni layer. It wasn't even Ethereum wasn't even when Tether launched, Ethereum wasn't even out yet. Like it wasn't even a thing. People don't realize this.
Wow.
Tether didn't even start to exist on Ethereum until I remember they started doing swaps in 20 I don't remember the exact date, so people are gonna come after me, like, "You were wrong about this," or whatever, but it doesn't matter. Tether was launched, and the reason it was so successful is because there was an ultimate utility for a non-volatile, stable crypto asset for a lot of reasons. Initially, we thought it was going to be because you needed a way to get in and out of crypto of Bitcoin because it was just Bitcoin without, like, getting a wire tr like, every time you wanted to trade, take a position, a wire transfer in, and then when you'd out, wire transfer out. Imagine trading that way. Like, imagine waiting for wires just to do trades. There were no stable coins, no exchanges allowed you to hold dollar balances because especially after Mt. Gox, that all became a big fiasco. Exchanges don't wanna be depository institutions. So then stable coins allowed for the de-risking of exchanges. It allowed for the stablecoin issuer to say, "We are the compliance, we will be that." And so stablecoins ended up becoming a really good idea, and USDC uh, and USDT, USGUSD, and then you have all the stable coins that are non-US based too. There's so many of them now. They're obviously being watched very, very carefully by governments because central bank digital currencies are going to be 100% a thing. And we know that China has been one of the first countries really talking about this and planning on actually doing this. Remember I asked you earlier about monetary policy. Going back to that question too, how will they do it? How will they be able to create a cryptocurrency but maintain some sort of like monetary control?
Well, I think that's the reason why they are looking into CBDCs, just because, right, they're realizing if they don't do anything, then the likes of Circle, Coinbase, or even Facebook, they're gonna push their own, right, and then it's gonna be widely adopted and used, and that's why they're all rushing to
Oh,
come out with their own. And like you said, right, I think stable coins are it is de-risking the whole market. It lets people. I think that's probably what found actual use cases as kind of what Bitcoin was proposed to do, right? The peer-to-peer transfer network, and now we're seeing just it's so much faster and cheaper to for me to send you USDC now than for me to send you a dollar wire transfer and going through the old Swift system. And I think that's um,
yeah.
what people are going to realize and more people are going to use. And I think central banks they have to adopt to this new trend of also utilizing the underlying technology.
So central
Um,
banks will be the issuers, not the governments themselves potentially. And in some countries they are somewhat different.
yeah, because for them, right, they're now printing paper money, but as the world are all going into digital, or we're living in Zoom
Sure.
meetings, living in the cloud, and paying through digital payment methods, and for them, right, instead of printing physical money, they're just issuing a digital currency.
Yeah, because
They're wrapping it, yeah.
up until now throughout the history of time, society has never had a problem with the issuer of money. You look at King Alfred the Great, his money was used around the world, even though England was super small back in the year 800 or whatever, because he was the issuer and everyone knew when he issued his coins, they were one coin was same as the other one. Like there was fungibility, non fungibility or what, fungibility. Sorry, I always get confused.
Fungibility.
Yeah, yeah, yeah. And throughout course of time, of course, time. So it's not the issuer that's the problem, it's the verification of scarcity that's the issue. It's like baseball cards. It's like we you know, these companies that issue these Pokemon or baseball cards, we trust and respect them because there needs to be an issuer, but it's the fact that you can't verify that like chain of custody has always been the issue. And so that's why central bank digital
Yeah,
currencies will work.
but it's interesting you bring up the the trust factor in this, right? And I think historically we've all believed in government and central banks, but I think then we start seeing what's happening this year, where where they're just printing massive amount of money, and then people. I think the institutions definitely felt this way, and now also the retail investors realizing that the cash on their hand is just not worth. It's not going to worth as much anymore, and they're having trouble understanding why the government has the absolute control, or the central banks have
Hmm.
this kind of power over the whole financial system. And I think that's why I think a lot of people are losing faith in the system a little bit, and that's why we're seeing this incredible run in Bitcoin, because it is very well positioned as a macro hedge, right? In that sense, um,
Yeah.
and I think, yeah, I think that the traders in the markets are having a hard time buying into what the Feds are saying these days, and that's why you're seeing some very volatile moves in the U.S. rates market. And I think people are just kind of second guessing, like, do we really want to believe in the Fed or the central banks of the world?
You bring up a very good point, and I want to ask you about stimulus very quickly because if like how do I give an example of a country without a okay, if Chile right now, sorry, if Mexico right now, I want to use something with a little bit of an economy. If Mexico right now did a stimulus package where over the last few years they printed 20% of all of the money that was previously in circulations now, so they basically like debase their currency by 20%. It wouldn't affect anyone outside of Mexico, or unless you were holding Mexican dollars or you were buying Mexican exports or you're holding on to Mexican whatever. The US dollar is a reserve currency. The so when you print stimulus, when you print money, it's not a debasement of the American worker. It's not saying that now the American worker has to work 20% harder. But the because the dollar is a global reserve asset, shouldn't the world have a much bigger say over American dollar printing, over American stimulus? How do you feel, or how do your friends feel who are exposed to the American dollar, not by choice, just because the world is priced in it, that now everything is probably going to go up by 10 or 15% in price, but they're not getting the benefits of being American?
Exactly, that's a great question, right? Everybody, myself included, a lot of my friends in Europe and Australia, they have to think about their FX exposure, and how do they hedge it, and what do they need to do, because obviously US has this power, of the dollar being the absolute, right, the king of the world, and everything's priced in it. And even I think, the banks in Australia have to raise dollar debt, everything.
Yeah.
Yeah, so I think given that, right, that's also what makes it interesting, because we see Japan and Europe also printing massive amounts, but then it's not really affecting the global markets as much as what we're seeing with dollar. And then with dollar kind of devaluating, DXY being at multi-year lows, and people are like, it affects global trade as well. I think the implication goes so far beyond. And that's why I think people are looking for, what are alternatives, or should I really look to Bitcoin as store of value, and as a hedge of FX, or more inflation, more things. And I think most of my friends in the US, I think they're more, I guess, worried about inflation, but for sure my
Yeah,
friends or
prices are going up.
ex-colleagues, um, and globally, they're worried more than that. They're more about more than just that, right? Precisely like you said, also the FX side of
So
things.
you created a solution. You created the Amber app, and I'm on ambergroup.io, and you created a mechanism for people to earn yield and at the same time, you're offering subscriptions. So it seems like you're more towards the subscription structured product option. Are your users more like retail, or are you seeking out potential institutions or family offices who like want to guarantee a year or 2 or 5-year out income?
Actually, it's been both.
Oh, cool.
Just this year has been crazy. Traditionally, we service more institutions and also high net worth individuals. But with the launch of our app, we're also expanding that into more retail market and really aiming to bring the institutional grade services to more people globally. And I think when we were making the app last year, we were already feeling like, oh, we feel like a bull market is coming, and there are going to be demand for something like this, for something that's easy to use for people who are new to crypto, just to invest, to buy their first Bitcoin and to deposit it and earn passive yield on it. So this year, I think we have seen like a double. Our retail user base has doubled from the stats you just mentioned, and also from the institutional and high net worth individual side. A lot of them are really looking into Bitcoin as a hedge. They're saying, right, the opportunity of not investing in Bitcoin is perhaps too high, that they're not ignoring anymore, and they're allocating, maybe
Because the
5 to
upside
10%. Yeah,
is
the risk
infinite.
reward is
Yeah.
excellent. Yeah.
So,
So
no, sorry, you finish.
I was just saying, we're seeing a lot of them inquiring about how do they really think about their portfolio. Um, I think they've already have properties around the world, exposure to equities globally, and they're looking to the next asset class, and they're all allocating perhaps like 5 to 10% of their cash into Bitcoin this year.
I have two more questions for you, and this is great because like every time I have a question, I want to like ask another question before the other question. The last question is related to advice that I want you to give to my listeners, but the first question I just forgot. What were just you were just saying? How did you lead end off the words you just said? Because I had a really great question.
It was about, I guess,
Oh,
portfolio
yes.
or yeah.
Okay, so over the last few years, as I started investing and diversifying into different assets, I find myself spending a lot of time rebalancing. And then I found out that this is actually a very common thing. Anyone who has a net worth of over a few $1,000s is spending their time, even if it's once a month, rebalancing your portfolio. And that simply means if you have assets one place, you're moving, you're rebalancing because sometimes things go up, sometimes they go down, the world changes. Up until now, rebalancing is very difficult because assets not just are not all exist on one type of like if all assets existed on the blockchain, not only could rebalancing be easier because every asset is represented by a token and you can resecured everything securitized, but you can have potential like companies like you who do the research and development better than me rebalance my portfolio for me using so hear me out for a second. This is crazy, right? If I own a building that's worth $1 million, I can then take that building and represent it as tokens in my wallet, and then all my rents can come in. And then at the same time, my house, if I own if I own loans that are lent out to other people, those can be represented as tokens too. And then you at the Amber Group, not right now, but eventually could work as a rebalancer. And the only reason that could work is now because all these assets are represented as tokens. Where in the past, if I wanted to hire you as my rebalancer or manager, money manager, you'd have to be on the phone, legal quick deeds and shit like that. Yeah, it's crazy. Is that the future we're going towards?
I'm so glad that you bring this up, because that's exactly the discussion we were having internally about our vision, right, for the next 2 or 5 years, and what it means to service, provide crypto finance service. I think the market, this industry, is innovating so fast, and we're already
Scary.
seeing some of these assets being represented on chain, right? Kind of, the dollars on chain, some of these non-fungible assets on chain, and we think, and there are a lot of people working on the tokenized solutions, right, by bringing more real world assets on chain, and that was actually what I spent a year working on at AirSwap or slash Fluidity. And I think that is going to be the future of basically all assets bring on chain. And we want to be at the forefront of servicing people and really helping provide all the solutions for on-chain assets. And like you said, right, I think portfolio is a big thing. We're going to launch a lot of these rebalancing, portfolio
I love it.
rebalancing, or diversification features in our product suite. But we really need to be innovative as the market goes, as the industry grows. And we're confident. I'm confident that we can do that. And I think there are so many talented and sharp people in the industry making innovations and changes. And I think we'll eventually get there.
There are a lot of amazing innovations, and there are a lot of companies like yours, and then you have a lot of scams and frauds as the industry grows. So right now, there's a lot of attraction towards yield, towards like earning interest and stuff like that. What are like one or two simple things that if someone's going downloading an app or a website that they can look at and know that this is a red flag?
I think, again, first of all, I think everybody in or out of crypto needs to understand a simple kind of math. It's just higher return equals higher risk. And if you see something that looks too good to be true, it probably is, and you have to figure out where the risk comes from. Um, people are really being people. A lot of people are attracted by the really
High
high
returns, yeah.
APYs, right, from DeFi mining, but they didn't understand the yield farming represent a lot of risks, right? There are smart contract risks, market risks, etc. So I think it's important to do your own research and understand what your own risk and return profile is, and then look into these products accordingly. Again, if
Yeah,
the
of
return
course.
looks too good to be true, it probably is.
Annabelle, how can my listeners follow you? What's your Twitter and the your website and everything?
Sure. You can find more information about the Amber Group at ambergroup.io. You can also follow Amber Group on Twitter at ambergroup_io. Can follow me on Twitter as well at Annabelle Huang as well.
Who's Amber, by the way?
There's no
Oh, there's no Amber.
Amber. I know, but people actually think my name's Amber these days just because
That's fine.
I talk about it too much.
Yeah,
And
why
I'm
not?
literally using everything Amber.
Oh, so that's yeah, that's you could make your middle name Amber or something for fun. I don't know. Like I was gonna make my middle name Satoshi just for fun.
All of this.
Thank you, Annabelle, so much for
That's
coming on the
perfect.
show. Thank you, everyone, for taking the time and listening and watching Untold Stories. Yeah, without you guys, I'd be nothing. And without my amazing, amazing producers at Blockworks Group, blockworks.co, they produce over 20 other podcasts that are run by my friends. Also, my writers and producers. You guys know who you are. You guys are amazing. And without you, the show wouldn't be here. I love you all. And to all my crypto listeners and fans, strength in numbers. I am Charlie Shrem. Talk to you later.